Ready to purchase your home? Great! Here's a few things to consider as you prepare to make that initial offer. In this presentation, we will not only discuss down payments, but the closing costs and negotiation tactics and tips for closing the sales contract. So let's get started discussing the closing costs. Closing costs are the costs outside of the purchase of the home itself that can ultimately determine the total cost spent in purchasing a home. For example, if your closing costs equate to $10,000 and your home purchase is $250,000, your total cost for the home is really $260,000. So let's dive into what some of those types of closing costs can be. According to Bankrate.com, typically speaking, the total closing costs can range from 2 to 5% of the loan amount. That might not seem like a large amount, but if you're looking at a $250,000 home, that means you could be looking at $12,500 in closing costs alone. So let's break down what some of those closing costs are. An application fee or underwriting fee is the cost associated with researching if you do or do not qualify for the loan. Home inspection fee can include looking for lead-based paint, verifying the house is structurally sound, and even checking for pests like termites. Title insurance fee is your protection in the event someone challenges your home ownership. This can also be used for a lender's policy title insurance, which lets the lender know you are in fact the owner of the home and the mortgage is valid. This helps prevent for a faulty title. A title search fee is a thorough search of the property records to ensure that there is only one buyer or one owner. A transfer tax is a tax that results from the title being passed from the seller to the buyer. In addition to those closing costs on the last slide, you may have other closing cost fees such as flood determination fee, which is for the life of the loan coverage and is required for those in flood-prone zones and is usually done through a third party. Others include a homeowner association fee, which is exactly as it sounds, fees for being part of a homeowners association. There's an origination fee, which is the lender's administrative costs, recording fees, which is fees for recording of the public land records, and even a survey fee, which verifies the property lines and shared fences. Now that you are aware of the closing costs, you'll want to figure out what your down payment will be that you're willing to spend. So let's dive into the factors that impact the down payment as well as how to calculate it. The amount of down payment you make will be determined by the type of mortgage you are eligible for. Some lenders may even decide your interest rate based on the percentage of your down payment. According to the Consumer Financial Protection Bureau, the majority of the time your down payment should reflect 3 to 5% of the home price. So if you are purchasing a $200,000 home, then your down payment should be roughly $10,000. You'll also want to consider the amount of savings you currently have and the amount of available cash from that you are willing to put towards the down payment. Then you'll subtract out the closing costs from that available cash. You'll want to make sure not to max out your savings and that you have a cushion of at least 3 to 6 months of expenses. So now that you know your down payment, let's talk about negotiating that sales contract. When preparing for negotiating the sales contract, it's important to know why you should negotiate the contract, as well as how to go about negotiating the contract and factors you should also consider or be wary of. According to LendingTree.com, there are a lot of benefits to negotiating your sales contract for many reasons, but in particular, the reasons listed here. Reducing the closing costs can help if repairs come up that are needed. This can potentially have the seller put money towards the repairs as well. If you have timeline factors that could impact closing dates, you can set those as well into the contract. Setting the contingencies can be the most crucial reason. You'll want to disclose and have in writing any contingencies, as they will be legally binding, so you don't risk losing money or being sued by the seller if an issue does arise that was not addressed. Other reasons is that you may find the house needs repairs after the inspection and needs to compensate for those repairs, and ultimately being able to negotiate the price can help in reducing the payments you'll make towards the mortgage. According to LendingTree.com, there are 3 steps you should take in negotiating a contract for a home. 1. You'll want to do some research first. Your real estate agent should be able to provide a market analysis to compare what other homes like that are currently rated at. In addition, it's good to know whether it's a seller or a buyer's market. With a recent shift over the past year, it has been a seller's market, with many corporations buying up homes. It's helped drive the prices of homes up, making it a great time for those with homes to sell and cash in on the higher value of their homes. This, however, means it's not a buyer's market, as bidding wars with corporations have resulted in less available properties for the average person. Lastly, know who you want to get your mortgage through and have the pre-approval letter from them ready. When it comes to making a strong offer, think of it as being your elevator speech for why your offer should be accepted. Factors that can impact what a stronger offer looks like may include sending a letter to the seller that is personalized, explaining what the house would mean for you and why you would be the one that they should accept. The other factors really come down to the expression that the time and money talk. That said, factors like a deposit or larger down payment, 20% or more, or showing flexibility with closing dates, even showing urgency too, along with the amount of contingencies you provide, the fewer the better, can all potentially increase your chances of your bid or offer being accepted by the seller. Lastly, LendingTree says that the way you respond to counteroffers can also have a great impact on the final decision by the seller. Sometimes it can come down to removing certain contingencies or renegotiating for less contingencies. Other times, it may need to be changing the closing date. So you started the process and hired a home inspector, and the inspection results come back and the home has some issues. There are a few things according to LendingTree.com that you can do with the contract now that the process has started. 1. You can request a lower sales price given the issues to help offset the cost of the repairs with direction from your real estate agent. 2. You can request contingencies like the seller complete the repairs or that they provide a credit towards the closing costs that would equate to the cost of the repairs. If the seller comes back and decides that they do not want to do either of those, then think about the return on investment you would make, knowing that you'd have to repair the issues yourself. According to LendingTree.com, you can walk away and potentially get your money back. So you've been making it through the process further, but now your mortgage lender requires an appraisal, and unfortunately the appraisal of the home comes back lower than the purchase price that was previously agreed upon. So what do you do now? Well, one thing is certain, you better have put a contingency in the contract that had a mention of the appraisal. According to LendingTree.com, this can greatly help should that situation arise. Otherwise, you could end up having to pay the difference or negotiate with the seller to meet halfway on the difference. If neither of those happens, you'll then need to either dispute the appraisal and request a second opinion, or if you did put an appraisal contingency in the contract, you could be able to cancel the contract without losing your money. To recap, when you are getting ready to make an offer and start the sales contract or agreement for purchase, you want to consider the closing costs on the home, evaluate your down payment, and determine what you can afford, and remember to negotiate. Negotiating with certain contingencies can give you the added protection needed to get your deposit back in the event that something does go awry with the appraisal or the home inspection. We hope that this presentation has been helpful for you. If you haven't already, be sure to watch the other videos in the home ownership or buying section.